to Navigation Trading Live. You are now part of a growing group of do-it-yourself traders who are trying to change the way investors think about building wealth. But because we don't believe in using financial advisors, stock tips, or traditional financial media, we have to do things different. We have to do things smarter. We do that through an art and a science we call trade hacking. At Navigation Trading, our methodology is based on statistics and probabilities, not hype or emotion. Our core strategies have been used by market makers, hedge funds, and floor traders for many years. Now, we share these secrets with you. Whether your goal is to make an extra $1,000 per month or replace your current income, with our guidance, you can achieve financial success beyond your wildest dreams. So, let's get started. What's up, Navigation Traders? It's Monday morning, December 4th. Welcome to Navigation Trading Live. Hope everybody had a great weekend. I don't know about you, but I'm ready to turn the machines back on and get the trading started. If you haven't already, make sure you connect with us on Facebook and YouTube and Twitter. Immediately following this live event, the video is posted. So if you can't be here right at 8:25 a.m. Central on Monday mornings, we do post it to Facebook and YouTube right afterwards. So couple things here. One, just remember this is all about you. So if you have any suggestions on topics that you want us to cover or comments or you want us to dive a little bit deeper into a topic, let us know. Leave a comment here on Facebook or YouTube or shoot us an email at info@navigationtrading.com. And big announcement coming up. So this is something that I've been working on for a long time. Excuse me. Almost a year, and so we've finally got a reduced commission rate with one of the top brokers out there that we use. We've actually got an arrangement with 2 different brokers. So super excited about this. We'll be shooting out an email either today or tomorrow. So look for that as far as details of how to take advantage. This is going to be for both new members as well as if you already have accounts with this broker. So super excited about that and can't wait to share it with you. So let's jump over to the platform and let's take a look at what's going on in the market. So you can see that stocks are up, and wow, what a crazy Friday and then weekend. So on Friday we had stocks way down. You can see by the bar here, the Dow was down over 300 points, S&P was down 30 plus, and then and it was all around kind of the potential litigation against the Trump administration for collusion with Russia during the election. And apparently the market decided it didn't really care, and it looked like tax reform is going to pass, and so the market just rallied right back up, and then the S&Ps are up another 16 today. So just continued strength there. So we'll continue to watch that. Bonds, which typically show an inverse correlation to stocks, you can see that bonds and notes are down. So you can see kind of the same reaction. They popped up and then they came back down to reality a little bit as well. The VIX is down today. Oil down over 1%. You can see gold is down about 0.25%. Nat gas down a little bit, about 0.75%. Looks like all the grains are up a little bit, anywhere from 1/3% to around 1%. Soybeans is up 1%, leading the charge to the upside there. And some of these others have not quite opened up yet. We've got about 30 seconds until the stocks open. So we'll wait for that to happen. But the couple of things that I want to look at today for our trade of the week. One, we do have some high implied volatility in a lot of ETFs. And so we can look at that as a potential option. And then I've got an earnings trade that I'd also like to look at. And without the markets being open, I kind of took a look at it pre-market. There's the bell. But once the options open in the stocks, I want to kind of go through and set that up and see if it makes sense for a actual trade to pursue. So if we go, we've got positions in a lot of the major ETFs, in the S&Ps, and the Russell, and the NASDAQ. We've got positions in some of these other ETFs. But if we take a look at, like, for example, XLF, which is the financials, they've really come on strong with the potential of what is anticipated that tax reform will do for small companies and the financial sector. Anytime you have a little bit of deregulation, that always bodes well for the banks and the financials and the brokers. So you can see how they just really skyrocketed on the news that the tax reform might pass. You can see implied volatility is staying nice and high, which is interesting because a lot of the time what you'll see in stocks, and specifically ETFs, is that when the price goes up, implied volatility is going down. Now this is a little bit different because it's based around an event. It's based around an event, in this case, which is tax reform. So, something could go wrong if tax reform does not end up passing. If something crazy happens, then we'll see a collapse in implied volatility, and potentially a collapse in price too. But we really don't obviously know ahead of time what's going to happen. So all you can do is base it on where IV is. So there's still some nervousness. There's still more risk in the market with implied volatility this high. But that gives us opportunity to sell premium. So that's one I'll look at. The other one I want to look at, if we just scan through the major stocks that we look at, Apple's up, Amazon's up. Let's see, most of the stocks, a lot of green on the screen, a lot of things up over 1%. Disney up over 1%. FedEx up over 3.5%. Wow, big mover there. Home Depot up over 2%. JP Morgan, you see one of those financials, a bank, kind of tracking the XLF, up over 3% today. Momo, technology stock there. Morgan Stanley, another bank, up big. And let's see what else, see if there's any other major movers here. UPS, Ulta, Target, so the retailers continuing their strength as well. So the one that I wanted to look at for a potential earnings play was Costco. So Costco has their earnings on 12/14. Excuse me. So that's about 10 days away. And so what I was looking at from a standpoint of, okay, we've got a little bit of contraction in implied volatility the last few days, which always bodes well for a pre-earnings calendar or a pre-earnings straddle. We've already had a huge move in Costco. So when that happens, I don't necessarily like to put on a straddle because it has to have another huge move on top of what it's already done. Now, it could go either way. But what I do like to do in this kind of a situation is I like to put on a pre-earnings calendar spread in anticipation that price might kind of stay in a steady range, and we would collect that theta for the next 10 days leading up to earnings. So let's just take a look at that. If we go to the trade tab, you can see, what did I say, December 14th. So the front month would be in this December 15th cycle. And we always go to the put side. It's trading about 187.5. So let's see if we buy calendar. And it's going to default to the December 22nd, which is the next one out. So let's just take a look at how that, well, you can see the bid ask is super wide in there, 62 cents by 280. So that's probably not going to be a good option, but let's just check it out here. Let's undo that. So we've got about $65 of risk, but like I said, the bid ask on that is super wide. We're probably not going to get filled at 65 cents. Let's see if we take a look at the options in the December 22nd cycle, and then let's also look at the next monthly, which is the January 19th. And they don't have the half-point wide strike, so we can't go out there unless we did like a 185. So let's check that out. So if we change the back month to the Jan 19, and we changed our strikes to 185, Yeah, it's pretty skewed. I'm not really looking for any directional risk, although to the downside is where I would look for it. So I don't know that this is really going to be a good trade unless we can get filled at a decent price on those D's 22s. Now it's down to 38 cents. You see that? So, oh, and actually we need to change that to 187.5. So I may try to get filled here. I mean, it's trading at around 50 cents, but I don't think we're going to get filled there. So I'll mess with that a little bit more, and you guys can check it out and see if it fits in your portfolio. Let's go to another one though. Let's go to an ETF. You know, the one that I mentioned, XLF, which is the financials, with this huge run up. Got huge implied volatility, high implied volatility. Now, one thing you'll notice about this, it's only a $28 stock. So that limits a little bit of what we can put on. And what I mean by that is I typically am not going to do any kind of a defined risk trade. I would potentially do a butterfly, but any kind of iron condor, you're just not going to collect enough credit. You're just not going to get enough bang for your buck to make it worthwhile. So on something like this, I would probably do a straddle using uncovered options. It's trading about 28 bucks. So if we sell a straddle, and let's take a look at this, collecting a credit of about $1.26. You can see here, if we set our slices to break even, 120, change this to 120. And let's try that again. Set slices to break even. There we go. So you can see we've got about a 50% probability of success if we just held it to expiration. But if we manage this like we do at 25%, you know, we're going to manage it at about 25 bucks. We'd obviously need to kick this up several contracts. So maybe, you know, trying to get a total of maybe $100, $200 on this trade. So I'll take a look at that. I'll take a look at Costco, play around with it a little more, make sure it makes sense for the portfolio, and you can do the same. If I do get filled, I will shoot that out to alert subscribers. And everybody have a great week of trading. Talk to you next week.